welcome Alex Morsing from Equivesto. Welcome, Alex.
Thanks, Craig. So how do I have a successful equity crowdfunding campaign? There are several key factors to a successful equity crowdfunding campaign, and the five main ones are your why, your impact, your community, your model, and your potential. And we'll talk about those five in detail in this presentation. Some key details to note are that and something that many people don't necessarily realize is that successful equity crowdfunding campaigns, if we look internationally, about 70% of the investors actually come and are attracted by the company that are raising the funds, and only about 30% of the investors are attracted by the equity crowdfunding platform itself. So just like what you imagine with Kickstarter, most people aren't signing on to Kickstarter necessarily looking for exciting things to support or back. They're usually doing their own thing, and then they hear about a company that's doing something exciting, and then they want to put their money behind that, and the avenue to do that is, Kickstarter or equity crowdfunding. So it's important for companies to understand that while the portals will work hard to get your campaign funded, traditionally in rounds that are successful, a lot of the investors are coming from the companies and their communities and that interest as well. So it's important to keep that in mind. If you think about an average investment as part of an equity crowdfunding round, which is between $500 and $700, and you're looking to raise, $500,000 to $700,000, you're probably going to need about 1,000 investors. So with that in mind, if you're thinking about, okay, 1,000 investors are people I need to attract to my business, probably 70% of them are people who I want to activate from my own community. You can use that as a bit of a benchmark when trying to grow your community to see what kind of engagement and interest you're getting before even running a campaign. Equity crowdfunding is not like traditional capital raising, but one way that they are similar is your story and the passion that drives your business can really make a difference. I know when we talk about venture capitalists, it often can get focused on the numbers and potential returns and growth. But whether you're going to a small select number of individuals or your larger community, your why and the passion behind your story and why you're making your business really can sell people and get them excited to get engaged, regardless of the size of the investor. So it's really important to think about having passion relating to your business, which I'm sure you do because it's hard work being an entrepreneur, and to get this far, you usually care about what you're doing. And what are the problems you're solving? How are you helping? And why does your business really matter in terms of that sort of connection and the passion behind it? And you want to make sure you're building your story as part of that. So you're thinking about why you got into the business and how it's really driving and what your business is doing to really solve problems. And you want to try to crystallize and perfect that story. So your impact is really about taking your story and all of that passion, that effort, and seeing what sort of amazing things that's going to translate into. So you are going to really attract investors by talking about the breadth of your impact, both from sort of positive change in the world, either locally or internationally, and the positive impact from a non-financial perspective, and also the potential for company growth and returns. So really crystallizing what your sort of growth plans are, what it's really going to look like when your company gets much bigger and is more successful, but also talking about and being really aware of the great things your business is doing and how that's helping to change the world for a better place. Your impact and your why tie nicely together to really build out the whole story and persona of your brand, and having strong story and impact tied to your brand can really make a big difference when attracting people and getting them excited about what you're doing. Obviously, with equity crowdfunding, as I mentioned, you're attracting a larger number of investors from the greater public. So it's really important to have a strong community beforehand. Your community is really a critical part of having a strong equity crowdfunding campaign, with 70% of the investors generally coming from the company themselves. So making sure that you're speaking your community's language, making sure that your community is growing and attracting more individuals, and getting them excited to participate is really important. If you're going to make a post on your website or on your social media about your campaign, and it's just a post, it's not a paid or a promoted post, you can mention that you're running an equity crowdfunding campaign. However, if you're actually doing a paid post or a paid ad, you can't talk about equity crowdfunding at all. You can only talk about your business and what you're doing, and just general sort of brand awareness. In addition to the community and the impact and the excitement surrounding what your business is doing and how you're engaging people, of course, it's also important to have really well thought out your business plan, how you plan to make money, your expansion and go-to-market strategy, and the potential return for the investors. A really different part of equity crowdfunding compared to a traditional Kickstarter is because the individuals who are participating are investors, they're looking to see and they have access to potential returns from your company's growth. So it's really critical to have well thought out and well crystallized your business model, your growth plans, and how those growth plans will translate into returns for these investors. Just like when speaking to angel or VCs traditionally, you want to have thought about potential exits, clear growth goals that are targeted. You want detailed financial projections, and you want to make sure that your business plan and business model can stand up to scrutiny. But also, you really want to paint a bit of a picture connecting with your impact and your why about the exciting future that you want to create, both financially and just through social impact regarding your business and what it's doing. But of course, when presenting any numbers like this, it's really important to back them up with data. That's one of the things that whenever I talk to a company, I always put that at the forefront. If you're preparing growth projections or financial projections, you want to make sure that you've got data, you've got sources, you've got references that can back up some of those assumptions that you're making. One of the most important things is campaign timing. So equity crowdfunding campaigns in Canada are limited to a maximum of 90 days. But not every single day during the campaign is equal. There's actually a huge importance placed on the initial first week and a half to 2 weeks of the campaign to really prove out and demonstrate traction and success immediately at that stage. If someone logs on to see your campaign and you're in the second month and you're only 15% funded, even though there are rules and controls in place to protect investors where they will get a refund if your campaign doesn't reach its minimum fundraising goal, there's still that emotional impact of seeing the company not being close to its goal and a lot of the time having elapsed in the campaign. So captivating and activating your initial sort of inner community during that first 2 weeks is very critical. So preparing that community beforehand so that the moment your campaign goes live, you're able to get that initial great traction and get 20% if possible of your goal within those first couple weeks really acts as a great signal and demonstration to other investors who might be interested but want to see some traction or really expansion before they participate. So getting people involved and signed up and participating within those first 2 weeks is very important. In terms of the total length of a campaign, the sweet spot for success is really 2 months. You want to see your campaign getting close to hitting its target by that 2-month period. Otherwise, there's a bit of a worry that you'll be able to maintain the momentum for that last month to hit the goal. Oftentimes, companies will hit their goal by the sort of 2-month period, and then they'll overfund for the remaining month. So just get additional capital for that remaining period. How do you get people to come and see your campaign while it's running? You know, you've put it up on a portal, and the portal is going to post about it and everything, but it's important to reach out to your broader community frequently to let them know that you're running this campaign, it's for a limited time, and this is really an exciting opportunity for them to participate. So before even starting your campaign, it's important to have prepared and planned out many social media posts throughout the duration of your campaign relating to milestones related to the campaign itself. So we just hit X number of investors, or we just hit 20% funded, or different things like that, but also posting about exciting milestones you've hit in the past and about the great things that your company is doing. You also want to make sure that you are indicating to your community and you're teaching them how you want them to interact with you. If someone comments and you comment back and you like their comment and everything within, you know, a few minutes or a few hours, you're helping to indicate to your community that that's the kind of close engagement that you want to have with them. So building up to the campaign, that's important, but certainly during the campaign, it's really important to have that really targeted, consistent engagement with the community for the duration of the campaign. Equivesto works closely with companies to align our marketing posts and yours to effectively work together and broaden the reach of your campaign. So while the campaign is running, we're both working together in tandem to both activate our community and your community, as well as the broader community who might be interested in an offering like yours. Another great way to engage the community during your campaign is to create additional specific and special content that brings them in more and also promotes key things like your why and your impact. So an interview with the CEO and other sort of fun quizzes or engaging content like that posted during the campaign helps get people interested in what's going on and gives them more information and more incentive to participate. The campaign is run from a campaign page, which is hosted on a portal. That's the only location that you can actually post financial details or structuring details about your equity crowdfunding offering itself. You can't post about that on your own website, though you can create a link or a sort of paragraph letting people know you're running crowdfunding and directing them to the portal. The actual details of the campaign all are on the single campaign page. Because it's all in this one area, it's extremely important to use the right language for your community and make sure that this page is sort of perfected so that when someone does land on this page, everything there is working harmoniously to convince people to participate in your campaign. So using the right language that fits your community to talk to them about what you're doing, being clear and concise with your language, outlining the benefits for your company and creating clear, different paragraphs about different topics related to your company and your offer is very important. You want to outline clearly your growth goals and some of the potential returns tied to your financial projections. You want to outline the detailed reasons for the raise, why it makes a big difference, and how that can really help catapult you to the next stage of your business. And you also want to talk about, and this is very important, some of the risks associated with your business. Portals operating equity crowdfunding and allowing equity crowdfunding are restricted by the Ontario Securities Commission and have to provide to investors a fair and honest description and presentation of each business offered for investment. And so part of that involves being clear and upfront about some of the risks pertaining to your business. So think about what those might be and prepare them so that people can, review and understand them clearly, but you can also provide additional information as to why you are dealing with those risks and why the investment is still worthwhile. Another great thing to do is to create strong video content for the campaign page. Video is so much more effective at captivating individuals than just images and text. And so creating a concise pitch video for individuals on the page and a demo video of your product go a long way to get them to click that invest button. What are some of the things that you should have and include in a great pitch video? First of all, it should be short and clear, about 5 minutes total. You should have the founder or a key team member do the talking and presenting, someone who's directly connected to the why and the potential impact of the business. That person is, as I mentioned, the great person to actually demonstrate the passion and why for the business, and they should be really emphasizing and talking about that a lot in the video. With video content, it's so much easier to see the emotion on your face, to get that engagement, and so really making sure that that comes across is huge in terms of having a successful campaign. And you also want to make sure in the video you can outline the reasons and the use of the funds and why that's really going to help make a big difference. If you need that $200,000 to launch your great product that's going to help save polar bears in the Arctic, you want to make sure people know that in your video. And finally, why are you exciting and worth supporting? You really want to use the video as an opportunity to present key information about your business, but do it while still showing the excitement, the passion, and the drive behind you and your team and why you're really the best people to be doing this. Another critical part of a successful round is your valuation and having a fair valuation. At the end of the day, even though you're doing all this marketing and you're talking about your why, this is an investment that people are considering. And so they're going to think about what they're investing and what they're getting in exchange for that. And the starting point to determine that balance is the valuation of your company. So it's important to make sure you set a fair and reasonable valuation. If you work with Equivesto, we help our companies to actually understand what a reasonable valuation would be for each of them and to give them some advice and direction around picking that fair valuation. Having the right valuation really can incentivize investors to participate. If they feel like the company is valued fairly and they're getting a good deal because there's a lot of opportunity in the future, they're definitely going to want to participate. Also, you want to make sure that you can leave space in your valuation for your company to grow and increase value over time. If you push hard and go for a higher valuation now because it sounds more prestigious and it feels good as a founder to have a great valuation, you can end up hurting yourself in the future if you're not able to have strong enough growth between this funding round and a potential future one. You might not be able to have that increase in valuation between the two that you're hoping for. So oftentimes, even though you might want a higher valuation initially, it makes more sense to have a fair, realistic, or even a little bit towards undervalued valuation so that you can clearly indicate that growth and increase in performance quickly after the investors have participated. That will also help them feel good about the decision they made to invest in your company. At the same time, though, it's important that founders are treated fairly and respected for the work, effort, and time that's put in so far. When doing equity crowdfunding, as opposed to venture capital investing, with a venture capital company, if the valuation is lower, that company immediately gets more control of your business. And so it's a little bit of a zero-sum game. The lower your valuation, the better it is for the venture capitalist who is participating. With equity crowdfunding, the portal is a bit of a friendly third party. We're working on behalf of both you and the investors. And so we want to make sure that your valuation isn't too high, but also your valuation isn't ridiculously low and unfair to you as the founders. Your valuation directly connects to the amount and percent of shares that are needed to be issued to raise capital. If your valuation, and when valuations are calculated, we're talking about a post-money valuation, or the valuation assuming you have the money that you're looking to raise. When you look at that valuation and you compare that with the amount of money you're trying to raise, if your valuation is 3 million and you need to raise 1 million, it's very clear that you need to offer 33.333% of your company in exchange for that $1 million. So figuring out the valuation tied with understanding exactly what amount of money you need and why you need it helps determine what the structure of the deal is going to be and the price per share and the number of shares that will be offered to the investors. So getting that valuation right at the beginning is a really important step. There's a lot of important things that we've talked about that you can do to have a successful equity crowdfunding round during your round and just before, but there's even more work that needs to be done before your round starts to really make sure that you're ready to go and your round will be successful. I would say probably 60% or maybe more of the work related to equity crowdfunding actually takes place before your round even starts. And it really comes down to preparing the right documents, activating your community, and making sure to leave adequate time to get prepared and plan out your campaign before you're trying to run it. Next session, we'll be talking about all the different prep that you can do to have a successful campaign and what you need to do to get ready. But you can also look on our website, equivesto.com/learn, where we have templates of documents that you'll need to prepare and a lot more information about how you can sort of get ready. But definitely a lot of the work involved actually comes before the campaign starts. So make sure you do your research and think about what's involved with that before starting to aim to have your campaign. Thank you all very much for listening, and I'm excited to answer your questions.
Well, that was great, Alex. I really appreciate it. How are you similar or different from your competition? They have a specific company here. I don't know what that company is, but Fund Scraper. But how is Equivesto similar or different from other crowdfunding platforms?
Sure, that's a great question. So there's not actually that many crowdfunding platforms in Canada. In order to operate an equity crowdfunding platform in Canada, you actually have to be licensed. That's what's called an exempt market dealer. And I would highly recommend, if you're considering equity crowdfunding, any platform that you might look at, definitely make sure that they are registered. And you can do that by going to aretheyregistered.ca. And you can type in the name of either the individual or the company to see if they have registration. So that is a really great place to start initially to make sure that they are legally allowed to work with you. In terms of how we're different from other equity crowdfunding companies in Canada, our focus is really on helping companies who have a great positive impact, who want to activate their community. So our minimum investment for the general public is only $100, which is, I believe, among the lowest. I don't know of anyone who has a lower minimum investment amount. And also, we're really focused on helping the companies through the process and having fees that are not punitive to the founders of the companies. So I know that traditionally, when companies were going out to raise capital, many individuals who act as brokers take a sizable portion of the raise, both in equity and in cash as payment, because it is a lot of work to make those connections. So we have lower pricing because we want to make sure that the equity stays in the hands of the founders. And most importantly, our focus is really on helping diverse investors and diverse founders gain access to capital. Traditionally, people usually like to invest in companies that they understand, with founders who kind of mirror them, their beliefs and their interests. And so what that's resulted in a little bit is we've got a lot of sort of upper class, wealthier white people funding companies started by white people, usually white males. And so we want to help change that narrative a little bit by encouraging and giving access to diverse founders access to that capital. So we are really focused on making sure that our platform and our process is both equal and equitable for everyone who wants to participate.
I like the way you've approached. We've been doing this, working together for a little while, so
Yeah.
we always just help whoever's in front of us. It's the way it is, and as many people as we can. You mentioned creating video content. How much video content should people be creating besides the main pitch video?
Well, that's a really great question. And it honestly really depends on your time availability and the quality of the video content that you can create. Oftentimes, entrepreneurs and founders don't necessarily have a lot of time. And so making sure you have that one really good pitch video is a really great start. If you have the opportunity to create more videos talking about other areas of your business, like a demo video or a video demonstrating some of the impact or your team or things like that, video content is always great. So if you're able to create even potentially a video for each of the different subject areas that you're going to address as part of your campaign page, that would be fantastic. But again, creating really good quality video content can sometimes be harder. I know, Craig, you're an expert at this, but we're aware that people are busy running the companies themselves. And so we want to try to help them create at least that one strong campaign sort of pitch video. And that's a great starting point.
Thank you again for taking the time today and educating us on everything we need to do to run a successful equity crowdfunding campaign.
Thanks, Craig. Great being here.